Well, I think the investors, by and large, have been very upbeat on India. And the reason being, if you look at the size of the market, coupled with the fact that India has displaced an enormous amount of capacity to reform, even when there was a slowdown elsewhere in the world. And I don't think there is any global impression of any slowdown in India. There is a deliberate effort of some people without adequate lack of understanding, without the proper understanding, to just talk the economy down in India. I don't think the world shares that impression. The fact that India remains one of the highest destinations of FDI coming into the country, I think the investors are extremely bullish about India. I've been interacting with investors, bankers, funds, universities, economists before I start the formal fund bank meetings in Washington. And I find a very positive response everywhere.
And before you head to Washington DC for that annual meeting, today the IMF has decided to cut down its Indian growth forecast by half a percentage point. I just interviewed Dr. Jagdish Bhagwati. I thought I should just let you know. He said the IMF should be abolished altogether. They make horrible forecasts. They go wrong. Do you agree with the IMF's forecast?
You see, the IMF consistently in the last 3 years has called India the bright spot. They've called India the fastest growing major economy in the world. And even if you look at their current projections, now there's always a possibility of a few decimals here or there, the final growth figures coming. India is shown as one of the higher growth countries in the world. And the growth trajectory as shown by the IMF really indicates that there is an upward movement as far as India is concerned. An upward movement this year in the subsequent quarters, and certainly an upward movement as far as the future quarters is concerned. My own perception is that there is a lot of activity taking place on the ground. The mere fact that during the quarter where GST was to be implemented, one did expect a slackening of the manufacturing because destocking of existing stocks was to take place. But then thereafter, all subsequent indicators seem to be indicating that there is an upward movement. The PMIs indicate a positive movement. The automobile sector, which is a major manufacturing sector, indicates a positive movement. The core sector, which is infrastructure, indicates an upward movement. And I think there is an upward swing going to take place in the subsequent quarters also.
But then isn't it unfortunate that the central bank RBI is not agreeing with you perhaps on that? It's cut down the growth forecast. It's also very worried about inflation.
I am not worried about the growth forecast because eventually it's the real figures and not the forecast that matters. As far as inflation is concerned, I must say that by and large India has done extremely well in the last 3.5 years in containing inflation. We've consistently had a sub 5%. In fact, we've gone down to even 2% and a little lower than that also. And I do foresee inflation to be broadly under control. The monsoon figures of inflation are normally high because the food prices go up. And currently, because of a combination of several factors, you have an upward movement in the oil prices were lower, which impacts us also. And I think there is a temporary spike. But by Indian standards, 3.36% inflation figure is never considered to be very high.
Then isn't it unfortunate the RBI, therefore, doesn't agree with that?
I don't have the liberty of using such expressions.
So, since last year when you attended the IMF and the World Bank annual meeting, we've seen two mega events, demonetization as well as the rollout of the goods and services taxes. Of course, I'm going to imagine to be key talking points at the annual meeting. As far as the GST goes, landmark tax reform, but I think what's also worthy to note is that you have been consistently reviewing the implementation and the rates as well. For example, you made those changes with SMEs and exporters. Have you already identified what else that is need to be done?
I'll tell you, if you look at the Income Tax Act, every year the finance bill brings 50 changes to it. Does that mean inadequate preparation? taxation laws are meant to be reviewed. The government must know where the shoe pinches so that you can do rectification action. And I think in the GST Council, we have a very formidable federal body which looks at the market concerns. And one of the legitimate concerns in the market was that the small sector was facing a high compliance burden. So we had to reduce the compliance burden. We had to give them some attractive composition schemes, which I think the GST Council rose to the occasion and did that. And we are watching the situation. I can't predict what will happen. But then there are sectors people are concerned with. In the last meeting, several members of the council raised the fact that restaurants are not passing on the ITC to the consumers, but asking for the GST. Now, this was never the intention of the GST law, and therefore a committee is looking into it.